The coronavirus, how come it became COVID-19? What are the market and economic effects of COVID-19? And wow did not wow them. I'm Peter Switzer.
I'm Paul Rickard, and we're mad about money.
So, coronavirus, all right, the brewer must be really happy.
Yeah.
They're now calling it COVID-19. How come?
Well, a bit like bushfires, Peter, all experts. So I'm an expert now on viruses, a bit like everyone else.
Yeah.
Look, as I understand it, Peter, it's the name of the disease, standing for coronavirus 2019.
Yeah.
I think the really smart people are now calling it SARS-2.
Oh, no.
But
There's an industry of renaming these things.
there is an industry of renaming the disease. COVID-19 is a disease. SARS-2 is the name of the virus. It's come from a family of coronaviruses. There's lots of them. And this is just one of them, so we're going to have to learn to live with it.
Okay, but you're doing the research on this because you're that kind of guy. Is this going to last a long time?
I think, look, the answer is probably yes. The question is whether we're going to think the answer's, it lasts for a long time. I mean, if you actually look at the progress around getting a cure, the time to actually, I think apparently the Chinese released the DNA stream up front, so everyone knows about it, but the time to get all the clinical trials done and testing does take some years. So look, the question is whether the market and the community is going to be worried about it. I mean, we don't get too worried about the flu, and the flu kills more people than coronavirus, but what's happened here is obviously the contagion spread a little bit. The Yanks have finally woken up to it. I mean, they just dismissed this out of hand. They just sort of, and
It's
suddenly
down again tonight.
and I guess that we're just going to have to live with this as we start to see the impacts, particularly around the supply chain, which I think people are most worried about, disruptions to the supply chain. So much is manufactured in China, or so many parts come out of China or South Korea for that matters. And also the disruptions now around travel and movement, and that's not going to be good for business. So there is an economic impact. Just how long it lasts and whether some of it's recover or not, I think, is the unknown.
Okay, well, as our bell ringer has gone missing, let's go to the second part of my Mad About Money intro, namely the economic and market effects. What's your best guess on what the market will do because of the coronavirus?
Look, I think the market wants a chance to buy it. So, so a correction was overdue in this market. Coronavirus is the excuse, and we've probably never seen. We know all bull markets go up. They all turn around or have a correction for some reason. People are great at finding the reason after the event. No one's ever aware of the reason beforehand. Otherwise, you wouldn't have one, right?
That's right. Good point.
But this is just the reason. So. I guess what's a little different here is it's so hard to know what the impact is going to be because, it's still largely a lot in the hands of governments.
It's a new virus.
What has been interesting is a lot of companies are warning about the potential impact. I mean, Seek yesterday, who reported quite well, they put some modelling about what it would mean to their Chinese business, Alpine, if conditions in February carry over the next 2 or 3 months and what it would mean to their profits. We're going to see more of that. Now, the coronavirus has become, you can blame everything now on the coronavirus and why you're not performing. But certainly there is an economic impact, and I think that's just going to keep the markets on tenterhooks. People will look to buy quality companies, so don't expect them to come off as much, or they'll bounce a lot harder. But I think that maybe the time to get rid of your dogs may have been past us.
Okay, well, the interesting thing is today I wrote on Switzer Daily, I looked at the fact that China, when SARS happened, was only 8% of the global economy. It's now 19.3%. So that's a bigger worry because of their impact on the global economy. Also, SARS did go 2002 to 2003. So I guess it's just the initial impact on valuations of companies. Share prices will fall. I wouldn't be surprised if the stock market fell 7 or 8%, Paul.
I think I think the big issue here is still mobility. It's keeping people. It's a lack of being able to move around. That's what's causing that's the impact. I don't know whether I'm so alarmed by the death rate. Obviously, that's we can't underestimate what that means. We are human beings, but it's about the mobility and the restriction. And I guess we've got to start to see some of those restrictions ease around travel and other movements, and then you can probably say this is going to be contained. But at the moment, the restrictions are getting tighter, and we haven't seen the full impact of that.
And really, for Australia, the trade war was probably less of a threat than this, because tourists kept coming during the
Yeah.
trade war. So it's going to be very interesting. But the one thing I have found, there's usually a pretty big bounce back once the worst is over and the world is heading in the right direction. Finally, Paul, Woolworths, ticker code WOW, did not wow them, did they?
Well, Woolworths has reported this morning, Peter. I think people are going to be a little disappointed for this, not because it's not a bad result, but Woolworths is priced to perfection, right? It's had an incredible run up. As there's been we've seen two real things happen in this market over the last 6 months. We've seen obviously the growth stocks like CSL and the Zeros and other people wanting to get a slice of that action. But also the so-called expensive defensives have got even more expensive. They're stocks like Transurban, Sydney Airport, Woolworths and Coles. Woolworths is just PEs are sort of almost stratospheric for a pretty old boring consumer staples company, almost trading on a multiple around 30 times. So this morning, the disappointing parts of the results, the EBIT number's a little bit less than expected. Dividend only up by 1 cent. Almost got beaten by Coles in the sales war. So in the final quarter, Woolworths store food sales up 3.8% like-for-like basis. Coles was up 3.6%. And Woolworths has said that 2020 started pretty softly. So comparable store sales in the first 6 weeks of 2020 only up by 2%. So that's the market's going to be looking more at that about what Woolworths has said going forward than it is about what's happened in the past.
What about the impact of Coughlin not coming, Paul? Were they having any impact on sales, and therefore that should help?
Yeah, there's a little bit of improvement in margin. So both talking mainly here supermarkets, there's a little bit of improvement in margin. So both they've actually been able to push the margin up a little bit.
Yeah.
So that's a positive. So the competition has probably taken a bit out of the market. And I think the Coughlin decision obviously helped Woolworths and Coles, because the last thing you want is another foreign competitor. But it's still tough going in this business, and it's sales growth of 2%, 3% is nice, but it's pretty hard to translate that to a PE of 30 to 1. They've still got some challenges, a bit of turnaround in Big W, which is encouraging, but it's almost a bit growthless like banks, and people haven't wanting to invest in banks. So I think there's been a lot of money going into Woolworths. I think the market, it's not that it's a bad result, the market expected a lot better, and I don't think it's there for the market.
Okay, I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money.